The company that owns the New York Stock Exchange just struck a deal that could put real Wall Street stocks directly onto a blockchain. Intercontinental Exchange, the parent company of the NYSE, is forming a 50-50 joint venture with the global crypto exchange OKX. Together, they plan to build a new United States broker-dealer that would route OKX's millions of customers into tokenized versions of NYSE-listed stocks, alongside ICE's regulated futures products. Tokenized stocks are blockchain-based versions of real shares, designed to trade around the clock the same way digital assets do. And in an unexpected twist, the new venture will be co-chaired by Andrew Cuomo, the former governor of New York. The companies say the goal is to merge traditional finance with crypto rails, giving users one place to trade both. For now, the deal still needs regulatory approval, but if it clears that hurdle, one of the oldest names in finance would be helping bring everyday stock trading directly on-chain. Just days after an insider warned that Ethereum's foundation could run low on money, the man who created Ethereum has now confirmed the cuts are real. Vitalik says the Ethereum Foundation will slash its budget by 40% in what he's calling a major reset. On top of the budget cut, the foundation is letting go of roughly 20% of its staff, while several of its senior leaders head for the exit. The Ethereum Foundation is the nonprofit that funds much of the research and development behind Ether, the world's second-largest cryptocurrency, from core protocol upgrades to grants for outside developers. Buterin frames the move as a deliberate reset, a leaner organization that hands more responsibility to the wider community of independent teams and client builders. But the timing is striking, landing in the same week that questions about the foundation's finances spilled into public view. For a network that millions of holders depend on, how its core foundation tightens its belt is something the whole market will be watching closely. $300 million a year. That's how much one hidden network was quietly laundering through illegal crypto mines, according to Thai investigators. Thailand's Department of Special Investigations says a Chinese gray capital network used secret crypto mining operations and an army of cash mules to move the money. Investigators describe a sprawling operation that disguised dirty cash as legitimate mining revenue, then funneled the proceeds across borders and back into the financial system. The agency has now expanded its probe, raiding sites and tracing the people who allegedly ran the network from the shadows. Illegal mining appeals to launderers because it can quietly turn stolen or untaxed money into freshly minted crypto that's far harder to trace than a bank transfer. Officials say the network had been operating quietly for years before the full scale of the scheme finally came into focus. It's a reminder that as crypto goes mainstream, the same technology is still being used to wash hundreds of millions in the dark. Subscribe now.